It doesn't matter how good of a trader you are or how long you've been winning. All it takes is one emotional day to destroy months of progress. That's the part nobody wants to talk about. We can talk all day about strategy, psychology, setups, win rate, but it all goes down the drain with a single tilt session. Tilt is the number one reason traders fail. It's what makes trading so difficult despite appearing so simple. Trading is not something extremely complicated. It's not rocket science. It's a relatively simple process that you repeat over and over. But the reason it has such a high failure rate is because that process is constantly getting derailed by tilt. It's like working on a serious project on your desktop and then losing it all whenever there's a power outage. The truth is, a trader can never really be profitable until they've eliminated tilt. Anything else is just a temporary run of luck, not a serious business. Real profitability isn't about how good your best days are. It's about how protected you are on your worst ones. Until you build a system that assumes tilt will show up, you're not building something that lasts. I used to be stuck in a constant cycle of tilting and giving away everything I made, but now I stack profit and let it compound. In this video, I'm going to show you exactly how to eliminate tilt for good, so you can finally build a real trading career instead of watching your hard work get erased over and over again. Tilting is really just the loss of emotional control. It's the moment you stop following a process and start reacting to your own results. And that's dangerous, because the market doesn't care about your personal results. It doesn't care if you're on a win streak or a losing streak, if you've made a mistake, or if you haven't traded at all. It will move forward regardless. But the problem is, you care. Your results will affect your state of mind and your trading. So let's say on a given day, the market is going to move a certain way. If you followed your process, you'd take a specific trade, manage it according to plan, and be done for the day. That's what you're supposed to do. But let's say instead maybe you took a boredom trade, or you missed a setup, or you used the wrong size. Now you're slightly on edge. You start looking for an extra trade. Maybe you size up to make it back. Then you take another trade that has nothing to do with your system. That's where things get unpredictable, and usually not in a good way. At that point, you're no longer making decisions based on the market or your strategy. You're making decisions based on your own results and emotions. It's the exact same market, but your trades are all over the place. And that's the problem. That behavior exists completely outside your system, which means you can't fix it or improve it. It would be one thing if you were following your system and wanted to get better execution, better entries, or improve your win rate. But once tilt gets involved, all of that becomes irrelevant. That's why a trader can only be truly profitable once tilt is eliminated. Completely eliminated. Because as long as tilt exists, your results are fragile. You might have good weeks. You might even have good months, but you're always one emotional session away from undoing everything. And most traders think tilt comes from being angry after a loss, or frustrated after a drawdown, or revenge trading when something doesn't go their way. Sometimes that's true, but more often than not, tilt shows up when you think you're fine. When you feel confident, when you start trusting your instincts a little more than your rules. That's why tilt is so hard to spot in real time. And unless you understand exactly why you tilt and how to stop it, you'll keep repeating the same cycle no matter how long you've been trading. Now, there are two main reasons traders tilt, and once you understand them clearly, tilting becomes something you simply don't deal with anymore. It doesn't even show up in the first place. Here's the first reason. Tilting happens because you don't actually believe in your edge. Now think about this carefully. I'm not saying you don't have an edge. You probably have a strategy that makes sense. But the question is, do you actually believe in it? Because there's a big difference between knowing you have an edge and trusting it when a trade goes against you. I mean, think about it. How often do you hear of someone blowing their account up while they're following their strategy? Like someone saying, I risked 2% per trade, followed all the rules, and just happened to lose 50 trades in a row and blow my account. That never really happens. If your edge has been tested and proven to make money over time, then a single loss shouldn't matter. A losing streak shouldn't matter. It's part of the game, and you've already accepted that. And yet this is exactly where tilt shows up. You take a loss, and instead of letting the edge play out, you start second-guessing. You hesitate on the next setup, or you start forcing trades to fix what just happened. This contradicts the very logic you claim to believe in. If you truly trusted your edge, you wouldn't feel the need to intervene. You'd execute, record the result, and move on. The problem is that Most traders haven't internalized their edge deeply enough to sit through discomfort. They understand it intellectually, but not emotionally. So the moment pressure shows up, confidence disappears, and tilt takes over. And until that confidence gap is closed, no amount of discipline or willpower is going to fix it. Which brings us to the second reason traders tilt, and this one catches even confident traders off guard. It's called the loose string problem. You've probably experienced this before. You notice a loose thread on your sock. It's small. You could just ignore it. But instead you try to pull it off, and it doesn't come off clean. It just gets longer. So you pull a little harder. Now the sock starts to unravel. Before you know it, what was a perfectly good sock is completely ruined. All because you couldn't leave that one small thing alone. That's exactly how tilting works. It rarely starts with a massive mistake. It starts with something small and uncomfortable. A day that didn't go exactly to plan. On its own, none of that matters. But instead of accepting it and moving on, you try to fix it. You take one extra trade, you adjust size. You bend a rule just this once to smooth things out. That's the first pull on the thread. And once you do that, it becomes very hard to stop. Every decision after that is no longer about the market. It's about repairing the damage you think you've done. You're trading to feel better, not to execute well. What makes this dangerous is that each decision feels reasonable in isolation. One more trade doesn't sound crazy. Sizing up slightly doesn't feel reckless. But together, they compound. And the entire thing falls apart. That's why tilt escalates so fast. By the time traders realize they're tilting, the damage is already done. People tell you to be more disciplined or control your emotions. But discipline doesn't help once the sock is already unraveling. What actually helps is never pulling the thread in the first place. That's why the solution isn't stronger willpower or more discipline. It's not about fighting bad things. It's having a system that forces you to stop before bad things happen. So if the first problem is a lack of confidence in your edge, the solution isn't to be more disciplined or trust yourself more. Because that doesn't work under pressure. Confidence doesn't come from discipline. It comes from structure, from knowing ahead of time exactly what you're allowed to do, what you're not allowed to do, and when you're done for the day. If you're constantly interfering with your edge, it's not because the edge is bad, it's because you've given yourself too much freedom in the moment, too many decisions, too many ways to doubt yourself. The fix is to put guardrails around your edge so you can't override it when emotions show up. And that's exactly what I did. The first thing you need to do is limit the number of trades you're allowed to take. Because tilt usually won't come from one bad trade, but from many. When you give yourself unlimited attempts, every loss feels like something you need to immediately correct. There's always another chance to make it back, and that's exactly what destroys confidence in your edge. So we need to remove that option. That starts with having strict criteria for entering a trade. That means a specific level, a clear entry trigger, conditions that either exist or don't. If they're not there, you don't trade. I use the LCE model. If you're new to the channel, I'll link some videos about that right now for you to watch later. But the LCE model is a level-to-level system. We can only take one trade from one supply and demand level to the other. It's not a strategy I can just scalp with. I need to determine a direction, then wait for the price to move in that direction, and target the next level. On most days, we only get one or two moves like this anyway. So I'm physically limited with how many trades I can take. I can't force things that aren't there. And that's the point. We're only exposing ourselves when we absolutely need to and avoiding the rest of the noise. So now we've limited our freedom and opportunity using the structure of our system. Now we need to limit damage. That's where the loose string problem actually gets solved. Because now we have the structure to prevent us from doing something wrong or impulsive. But it doesn't mean that something wrong will never happen. And if it does happen, we need to stop it from unraveling. What I do is simply put a hard stop. If I take one trade and it's a win, I lock it in and stop trading for the day. If it's a loss, I take another trade. If that trade is a win, then I'll be roughly break even and stop trading for the day. And if it's a loss, I've hit my max loss limit and stop trading for the day. So every possible outcome is considered and controlled. My trades are already strictly limited to my system. And on top of that, I have hard daily stops once I hit a loss limit or a win. Because after that point, the odds stop favoring good decision making. This is what makes tilting nearly impossible. not because I'm suddenly more disciplined, but because the system doesn't allow me to keep pulling the loose thread. I'm physically removed from the situation before things can escalate. Once you combine a system that limits how often you can trade with rules that limit how much damage you can do in a day, there's nothing left for tilt to attack. At that point, your edge is allowed to play out, your capital is protected, and your progress actually compounds. Now your path has no obstacles. You're no longer fighting yourself. You're just executing a process and letting time do the work. That's how you build something that actually lasts. And if you've been realizing that tilt is holding back your progress, that's exactly what the LCE Accelerator is designed to fix. We run weekly calls to keep your entries, stops, and targets clean, and you'll have a private one-on-one chat with me so you can get feedback anytime. You'll also get access to my supply and demand chart and a community of traders who all follow the same system and hold each other accountable. If you're interested, the link is below. And if this video helped you, make sure to like, subscribe, and turn on notifications. I'll see you in the next one.